Hey, it's Ryan Bundy with NFM Lending. I'm here to talk to you about how to get pre-approved. There's a lot of really good points in this, and watch this very closely. There's a lot of mistakes to be made in the pre-approval process, and I'll share some of those with you. Before we jump into it, can you please subscribe and help us out? We're trying to build this channel up. We're new to this. You can see that most of our stuff is short form. My goal in the next year is to do at least a video a week, educating people on the things, what to do and what not to do is just as important. I've been doing this for 21 years, and I can tell you I've seen everything and seen a lot of mistakes, and I've learned a lot by making mistakes, and I'm here to coach you up a little bit. So let's talk about the pre-approval process. It's a lot less daunting than what most people think. I think it's super important that you trust your lender. There's a ton of different lenders out there. I will do videos on that later, but there's banks, credit unions, online lenders, mortgage companies. I would suggest that get some referrals, people that you trust, and maybe interview 2. I would interview 5, maybe 3 at the very max, because what happens is you're gonna get different information from different lenders because they have different styles. They also have different experience, different levels of knowledge. So it's really good to see who you vibe with and who you trust. It's not just about interest rate. We'll go into that a little bit later, but you have to make sure your loan closes, that your pre-approval is bulletproofed. Otherwise, you're gonna be in the loan process and you're gonna put your notice in at your rental, and you're gonna have your moving truck right before closing. And it happens all the time where lenders call you and go, hey, we're closing late. We need 2 weeks, or you're not closing at all. Now you're homeless. So make sure, my number one thing, trust your lender, trust your real estate agent, get a referral, and just do your research on people. That's the number one thing I would say. So once you do get introduced to a lender or you find somebody, book an appointment with them. Make sure you go into an in-depth consultation about your situation. Give them everything. Like, I've had people withhold information from me many times, and I tell them, tell me everything, because we're gonna find out. We pull your credit, we look at your income, we see all the past things that have been going on, plus there's all these fraud alerts in the background kind of working, and they catch things that maybe we couldn't see from the application process. So be very upfront with your lender, so then they can help you navigate those bumps on the road. So what that looks like, everything's pretty digital these days. I like to do Zoom calls, in person or Zoom calls, so I can see if we vibe together with our energy. The first step would be to meet with your lender. They're gonna have generally a digital application link. You're gonna go online, fill out a typical application about your work history, some personal information, your asset information, and then that lender is going to review that. They should review everything and then send you a needs list. We call it a needs list because everybody's needs list is a little bit different. Some people are self-employed, some people are hourly, some people are salary, some people have past credit issues, some people have several other houses, which, there's a whole other thing. So we review it, then we send you a list of what we need. The automated system, when you do your application, sends you a generic list, kind of reads your application a little bit and guesses, but we're gonna give you a very in-depth list. You're gonna upload those documents as fast as possible and book another call with your lender to really go over that approval, because they're gonna go through every piece of paper, look at everything, and then set up the file for that meeting. So then in your pre-approval consultation, the most important thing, it's not about the price, because people come to me all the time and say, hey, I've been looking at houses at 600,000, and that's the price range we're in. And then I say, well, what's your monthly payment budget? That includes taxes, insurance, your mortgage payment. Like, what does that look like? What's a number you feel comfortable with? And what's a stretch number, okay? Because some people go out shopping and they tend to stretch that a little bit. So I get those numbers, right? I also get your cash to close. What's your down payment plus closing costs? Because you have closing costs. Sometimes the seller pays closing costs. If you can negotiate, if market's hot, it's very difficult for that to happen. So what is your down payment? Are you 5% down, 10% down, plus your closing cost? If we have those two numbers, I can tell you what your purchase price is going to be. The biggest mistake I see is when people get pre-approved, they don't get a full consultation revolving around monthly payment and cash to close, and the lender's just like, yeah, you're approved for 600. Good luck, come back to me when you find a house and we'll talk interest rate. Well, I've seen people come to me with a second opinion and they're $500, sometimes $1,000 over their monthly payment budget. So make sure in your pre-approval consultation, your lender is taking you through that. So then maybe you need to be looking at $500,000 houses. So super important. Take this away. Biggest mistake I'm seeing lately. Okay, so now that we got your purchase price dialed in, you know how much you need to bring to closing. okay? There's no surprises, right? You know that this is what your budget is. There's not gonna be any surprises on your monthly payment once you get into contract on a house. So what we do upon pre-approval, we issue a pre-approval letter to you and to your real estate agent. It's generally editable, just in case it's 10 o'clock on a Saturday night and you need a pre-approval letter and someone's not available on my team, then you can make an offer with that letter. So you have the letter, but we always invite you through the process to go back, talk to us or talk to your lender when you need to run numbers. Sometimes people's budgets change. Sometimes their down payment changes. Something comes up where they're gonna get gift money from family, so now they got more money down. So you need to consult with your lender constantly during this process just to make sure that nothing has changed and just keep us updated in that process, okay? So that leads me into if things have changed during the search when you're searching for homes. Two main things that we see people do that's a big problem is opening new debt. So we get you pre-approved, we qualify you, and then people go buy a car, they don't tell us. There's systems in the background checking for that stuff on your credit report. When you get into contract, we update that stuff and all of a sudden now you don't qualify, right? So super important, do not open any debt until you consult with your lender. Sometimes it's totally fine to do it, but sometimes it's not. So we gotta see if it fits into the qualification. So number one, do not open any new debt during your pre-approval process, during your home search. Number two, don't change jobs without telling your lender. This happened, I've seen deals die right before closing because somebody did not tell us they were leaving their job. So when we call, every lender calls your employer and asks, hey, are they still employed? And we've heard, well, they are, but they put it in their 2 weeks notice. End of the deal. Deal is dead. Now, if you have another job lined up and it's the same line of work and it's similar pay and it's steady, we can do that, but it can delay your closing. Because if we're a week before closing or 2 weeks before closing, we have to verify this new information. It might slow things down. So always consult with your lender if you're gonna change jobs. Don't open debt, don't change jobs without telling your lender. Another thing about a lot of people wanna go to self-employed. If you go from W-2 work, hourly salary to self-employment or commission-based, that is a problem. So make sure that you consult with your lender if you plan on doing any of that because your deal will be dead. You have to have a history of being commissioned or self-employed because you don't get pay stubs and they don't show the whole story. So it's super important too. Okay, so just a quick recap on what we talked about. You're gonna do the application, usually digitally. You're gonna book a full consultation. Make sure your lender, if they're not taking the time to give you a full consultation, go over your down payment budget, talking about anything to avoid, what to do and what not to do, and consulting with you throughout this process, then that's a red flag. Make sure you're interviewing other lenders that are gonna take good care of you. I think that's good for now. I'm gonna put out a lot of good information going forward. Please subscribe to our channel and thanks for watching.